Hey guys, good evening everybody. Welcome to another edition of the AccessToTrader.com nightly wrap-up show. Hope everybody is doing okay. So the one thing you don't want to kind of overthink, and this is kind of what we try to really articulate every single day to everybody in the room. You don't want to sometimes overthink a situation. A lot of people, again, kind of referencing back during the internet craze was, well, the market couldn't go higher because, well, it went up so far so fast. And one of the problems was not only were people not making money, or not making necessarily money, but not making really good strides because they couldn't believe the overall aspect of what they were seeing because they've never seen that before. And you kind of fast forward to what we are right now. The market, the Dow, I read somewhere the Dow is up roughly around 2,500 points since election night. 2,500 points. That's not a knee-jerk reaction anymore. That is a viable, aggressive, rabid bull market, and the shorts again are just running out of excuses of what's going on wrong. The most ironic part about a market like this is every single time, we talked about this all the time in the live room, every single time we think there's a chink in the armor and the market's about to get weak, because as we see a lot of the leaders kind of start back testing, the next thing you know, the market just turns around and keeps on going higher. And that's what we have here. So it's very tough and actually easy at the same time to create more adjectives to what's going on. I think sometimes, keep it simple, stupid, right? Sometimes materialistically, the easiest thing to do is actually just appreciate what is going on in the market. Now again, the value of the market and what the reality of the market are two different stories. Again, if you always ask me, I'll always tell you the value in any single tape, any single stock, any single setup will always come from the bottom. But when you have a rabid market, again, it doesn't care if you're swinging stocks for a day. It doesn't care if you're swinging stocks for 30 minutes. And if your execution is bad, if the stock goes against you, the scoreboard is still the scoreboard. And again, you can just see the low from the S&P 500, that 2083 level, all the way up to where we are right now. Again, we're talking about huge move. I mean, a huge move in the S&P 500, in the NASDAQ 100, in the Dow Jones Industrial Average, in the RUT, and everything else that is with it. So it's almost asinine to kind of sit here and try to say, well, try to make excuses for this bull market. It is what it is. It is what it is. And I still stand by the theory of, well, you should trade optimistically, okay, but have a guard. Have a guard, because again, the greatest markets, the greatest bull markets I've ever traded, the last thing they want to do is have the market kind of crap on you for no reason, because you're trying to avoid all the signs. Okay, you don't want to avoid all the signs. A lot of the signs are there because, well, gravity is real. And again, just because we're trying to be a little more cautious, right? Not trying to give an extraordinary amount of exposure doesn't mean tomorrow will be the day they completely turn around and the future's gonna be down 500 handles, right? It doesn't matter. But it is our job to kind of trade the individual setups, trade the value, identify where the easiest allocation for properly funded risk is, and kind of click the mouse the right way. And if you look at the organic movements, and again, our part-time trader program has been very successful because, again, the actionable watch list, and again, it's not a watch list anymore. I keep on calling it a watch list. The actionable trading list for the next day, it pretty much puts you in that opportunity that you don't need to fish for an aggressive trader. You don't need to fish for something sexy. It's all in front of you. It's risk defined, and as long as you're using a very simplistic way to navigate, especially on the swing trading side, the previous day's low as your stop, you're going to be in the trade. So let's talk about it, right? Let's talk about it. So, just stocks from, just the watch list that they're triggering nice and calmly in the way you trigger the trade. We've been talking about FTX for about a week, and I said the longer the distribution, the bigger the move. And the stock finally went. The stock finally went. It opened up, retraced, and once it took out the opening range high, stock almost was up over 3%, closed almost up 3%. Big move. And again, now the way you are navigating this trade, if you bought the stock today and you finally bought it, you're using the previous day's low. Today's low is 46.58. That's it, 46.58. And your upside target is still all the way up to this $51 area. That's how you manage, again, organically, with no emotions, very simplified, a swing trading position. The same thing with JBL, from the day before. Same thing with JBL the day before. The stock traded, broke that 25.15 level. Not that the stock is running away and is so just unbelievable. But did the stock take out the previous day's low? Right? Never did. So now tomorrow it will be the previous day low is 25, 30, 23. So your risk is just getting tighter and tighter and tighter. And now you're at the position that you are trading from a position of strength. You're not guessing, you're letting technical analysis speak for you. So for example, Sienna today triggered as well, right? Sienna today triggered as well, guys. You know, stock triggered, we talked about that 25.32 level, the stock triggered, and look at today's low, right? So if you're swinging the stock, your low for today is 25.10. As long as the stock doesn't sit for a very long time, doesn't take out the 25.10, you're still in the trade, guys. Just look for the last 4 days. Every single day is a high, a low, higher low, a higher low, a higher low, and that's the way you maintain an orderly, simplified plan of keeping a swing trade. So, you know, the swing trades have been very, very good. Again, all you need to do is just scroll back every single day, guys. Every single day for weeks and weeks and months and years, we've been, giving out identified profitable trading with taking the risk off the table. Very, very simple, because again, you want to make sure the pot at the end of the rainbow justifies the risk. And if it can't, you can't put on the trade. So Sienna today triggered, STX today triggered for all you guys who are swinging these things. IVAC, IVAC gapped up and just kept on going. We have this thing off the 10, 20 level. A very, very strong name. Again, if you're long the stock today, you're using the 10-10 stop. So if you bought this thing, again, your risk is very, very minuscule compared to what it can do. And again, if you need to toggle where potential for the stock can go, just look at the weekly chart. Just look at the weekly chart and see exactly where the stock is going. And right now, if you look, it's stock's in orbit. And yeah, you could go back to 2011, 2012, but this is a very, very strong move. And again, it's very, very important to treat these things as vehicles of defined risk instead of just vehicles like a runaway train. It's very, very important, guys. Again, I say this all the time. Everybody wants to be a swing trader, right? Everybody wants to be a swing trader until the stock goes against them, and then they're asking, what's my stop? Okay, swinging a stock is not as hard as a lot of people think. It's not as hard as a lot of people try to make it out to be. As long as it doesn't break at range, and as long as it doesn't take out the previous day's low, for the most part, it's a valid trade. So today, for example, I put on a new position, right? I've been holding this CGIX half size still from 195. I've been in this thing for several weeks. Again, just managing my position. RTTR, again, it's flat from where I bought it, but it's not really giving me a reason, to get out of it. Again, I've been in the stock for like about a week. It's not really giving me a reason to get out of it. So I'm still holding on to it. So today I bought CBMX, right? I bought the stock at 405, right? 405. It went as high as 424. Again, I'm holding it. I'm holding it. I mean, look at the last 4 days. Again, you have a low, higher low, a higher low, a higher low. So tomorrow, if this thing starts cracking below 390, my risk is going to be roughly around 15, 20 cents in the trade. But if this thing starts, if this thing gets above this 425 level and takes out this 435, it's going to explode. So again, I'm just using the previous day's low as my guide. It takes away the emotion. It takes away watching every single tick. You just have to know exactly where your range is and make sure stocks don't pierce that range. Some other pivots today in the room. Amazon was good too on both sides. Amazon was good on both sides. I bought the opening range high right here. I bought the opening range high right here, and I made sales all the way to this candle right over here. My last sale was in the 36s. I'm sorry, I bought it at 34s. My last sale was in the 36s, so I made like 2 and change on my last runner. I didn't see this thing. I thought that it was going to stop around that 38 level. That's kind of what we discussed the previous night, and it's kept on going. But not only did it give a trade to the upside, and I tweeted this out right here. I tweeted this out right here. Here's your bottom range. Here's your sneaky pivot, 38.40, right? Here's another candle, 38.40. Once it broke the 38.40, right? Look the stock went down another 2 and change. So these pivots work very, very well on both sides. As long as you let them build in that direction, as long as they're building, they're fine. And you guys saw exactly what happened. And for those guys in the live webinar, you saw exactly what happened. Once it started building, right? Not trading. Once it started building below that 38.40 level, it was $2 and change move to the downside there as well. So it was a really, really good pivot to the upside, really, really good pivot to the downside. it is just a matter of paying attention. The one trade that I missed, I know some of you guys did catch it. The one trade that I did miss this morning was Tesla. Okay, and we talked about this area right here, this 731.30 level. I don't know where the hell my head was at. I missed it. All of the stock did was go up 10 points. So I'm sorry, it's 12 points. So I'm a little bit nauseous on that, but it is what it is. It is what it is. And again, I always try to convey the message. It's not how many trades you take, it's how many trades you take properly. And so it's very, very important, guys, that you have that mentality. It's very, very important that you understand that every single day is not that social media day of trading. It's all about understanding the value in front of you. You're going to miss trades. I miss trades all the time. I'm looking at Tesla, I go, wow, look at this $10 move I missed. Again, would I have caught the stock for $10? Probably not. Okay, probably not. But the ramifications of a stock going up in one candle 5-6 points, I'd have to believe even if I screwed up, I'd have made $3 on the trade. So that sucks, but again, it is what it is. Also, ESA was a nice little scalp for all you guys who did take that. And I kind of had some bad notes today. I didn't take great notes today on some of the other pivots, so I do apologize. But again, the overall spectrum of the market is you trade the tape that's in front of you, whether the market's up 140, down 140, or somewhere in between. It's most important to make it to the next day, and that's where we are. We're making it to the next day, and let's talk about the segue to the next day. So I want to start out with CBMX. For all you guys who are not in the trade, I had a 20-cent mover on this thing, didn't take any off because of the liquidity, which kind of sucks. So it closed right where I bought it. But tomorrow, guys, if this thing takes out the 425 level, you should be looking at levels of 435, and then hopefully this thing could get very, very aggressive. So definitely keep an eye on CBMX. Some other names that potentially you could swing, guys. Keep an eye on some of these names. For all you small cap lovers, I've been watching this QTN out for it feels like forever. I mean, look how long this base is, guys. Okay, look how long this base is. This base is going back all the way to, let's see here, October the 26th. Okay, so this is a long, long range. If this thing could get above that 98 cents to a dollar, this thing could go. So keep an eye on that. Watch CNET. Okay, watch CNET. Good consolidation here. Had a nice run, right? And look at this bull flag here. Beautiful bull flag. I mean, gorgeous bull flag here, guys. All it needs to do is literally get above this range, which is 535. So keep an eye on that. CDNS had a big move last week. Okay, big move last week. And the one thing that the bullish of all bullishness is when a stock doesn't go down after a big move, it's obviously something good here. So keep an eye on it. Again, the same thing, folks. You have 4 consecutive days of low, higher, low, higher, low, higher, low. So as long as it doesn't take out the previous day's low of 29.50, guys, watch this break here of 29.90, $30 area for a possible move higher. So keep an eye on CDNS. I like this THRM. Okay, long distribution here as well. Auto parts, long distribution here as well. Keep an eye on this thing above that 3630 build. So keep an eye on that. UTEK looks very good as well. UTEK is a semiconductor name. Semis have been super hot. Keep an eye on this thing, guys. A break above 2870 can get this thing going. Again, your risk is roughly about a dime, so keep an eye on that. And AEHR, AEHR broke above that last week's high of 369, put in a high today of 395. Keep an eye on the volume. If the volume starts getting out above that 395, $4 level, keep an eye on it for the next leg up. Obviously, tomorrow morning, get there early morning. Okay, we'll talk about Apple, we'll talk about Apple, we'll talk about Google, we'll talk about Amazon, Netflix, Tesla, and everything in between, because again, we have to see how the ranges line up before we talk about the high beta trades. So guys, have a great night, everybody. With God's help, I'll see you all tomorrow. Take care, guys. Have a great night.